I'm always one for a data point. I'm thinking specifically about the Mag 7. And we have this index or gauge of the Mag 7 at one point in the session, its biggest drop on record. Take everything that our team have just said and apply it to what's happening with the biggest technology names.
Sure, hello. Clearly, volatility didn't take the summer off. We saw the markets were led by the Magnificent Seven, and on the way lower, it's been the Magnificent Seven that have been really the weak spot. I think the issue has been that of expectations. These companies continue to deliver outsized earnings growth, but the bar was very high heading into this quarter. And as a result, we did see some disappointments. These were the names that have been trading at the highest PE ratios. So as we're talking about the yen carry trade, many hedge funds borrowing in yen to invest in other assets. And now with the yen appreciation, they're selling some of those assets. And no doubt, some of these are the Magnificent Seven stocks. So we have a combination of high bar. We have earnings broadening to other sectors. For example, this earnings season, we have seen the biggest earnings surprises coming from defensive sectors and also some of the cyclical ones, and not the growth sectors that we have been used to over the last couple of earnings seasons. But at the same time, the fundamentals have not changed.
Angelo, exactly. So let me jump in. The fundamentals have not changed, is what you just said. We made a big deal of the gain in the S&P 500 in the first half of this year, 14% or so, largely coming from the Magnificent Seven. And in years where the S&P 500 has gained double digits in 1H, it usually goes on to perform in 2H. How much of a departure is this session from that historic trend?
No doubt this is an abrupt and uncomfortable pullback. And I think there's two things going on. One is the technical picture, which, if it is an overreaction that potentially move lower, presents an opportunity for the remainder of the year. And then the second part we need to answer as investors is there something fundamentally broken? Meaning, are we heading towards a recession? Because a lot of that narrative has been around the growth scare. And I think for our clients' perspective, we need to first answer the latter. The US economy still continues to grow. Let's call it trend or maybe slightly below trend. Looking at the GDP Now estimate for Q3 is still slightly north of 2%. We just got the ISM services PMI that was well into expansion territory, and the employment component, very importantly, provided some reason for optimism given the Friday jobs report that we got. So we do not think that the US economy in a week's time is going to fall off bed. We have seen still rising earnings, corporate profits, consumers, and corporate balance sheets remain healthy. So I think it fits into the narrative of broadening in market leadership away necessarily from the overall and potentially overextended tech. So we are still positive for the remainder of the year, but we don't think that the Magnificent Seven are going to be once again the ones that everybody gravitates towards.
Angelo, chief of among what you've just outlined is NVIDIA. We are way off session lows. NVIDIA is down 6%, but one point in the session was down 15%, which for a company that size is a big drop. There was a report from the information that said Blackwell, the next generation AI accelerator, would face delays due to a design issue. Over the weekend, NVIDIA got back to us and said that actually Hopper demand is strong, Blackwell sampling has started, they don't comment on rumors, etc. You just said that we'll move away from sort of the concentration of leadership, but we have to wait until the 28th of this month to get NVIDIA earnings. That's quite a long period of time in which the markets could have some anxiety for what has been a leader in the direction of travel. What do you make of that?
Yeah, the NVIDIA is the last of the Magnificent Seven to report earnings, and no doubt a stock that everybody, the whole world is watching. The theme so far with everybody's excited about the artificial intelligence, but there has been some skepticism over the last couple of weeks. And investors are getting increasingly impatient to see the heavy spending of AI translate into return on profits. But what we have been hearing from the remainder Magnificent Six of the Seven, that they have been spending, so that should continue to be a tailwind for NVIDIA. And I think what we are coping with here is, again, the high bar of expectations. When you have a stock that's been up so much over the last couple of years and so far this year, even with the recent pullback, naturally that creates tension points whenever news like we have been getting over the last couple of weeks emerge. But at the same time, again, we still continue to be positive around artificial intelligence, not only for this year, but for the next 5 to 10 years. And I think that is important for investors to remember.